Ramp is doing something we've never seen before in fintech. They're building a mainstream hype machine without involving Matt Damon or Bitcoin in any way. From Super Bowl ads to brand partnerships with the likes of Kevin from The Office, genius alignment, and Saquon Barkley, Ramp is the darling of fintech right now. According to a Business Insider exclusive, Ramp is preparing for an IPO. The Fintech IPO window, if you've been paying attention, has been effectively closed for the last few years, and for good reason. If you look at what happened after the 2021 wave of companies going public, names like Robinhood, Affirm, Marqeta, the story's pretty consistent. Massive hype going in, and then a brutal reset. Many of these companies lost 60, 70, even 80% of their value. The reason's actually pretty simple. The neobanks, brokerage houses, and lenders of the first couple waves of fintech were priced like software companies at IPO. But Mr. Market said no, gave him the Dikembe Mutombo no. The market decided to treat them like financial services companies, not software companies trading at software multiples. Ramp's story is different. It's not the fact that they're positioning themselves as a software company. That's exactly what everyone did in the previous playbook. It's the fact that Ramp can actually run that playbook, have the numbers, the revenue, and growth story to back it up. Be so good they can't ignore you, Steve Martin once said. At its core, Ramp is a spend management platform. You know this. The card is just the entry point. The real value's in the software layer. Automation, cost controls, procurement workflows, AI-driven insights into the company spend. That distinction matters more than people realize because software companies are valued on efficiency, retention, margin expansion. Financial companies are valued on balance sheet risk, net interest margin, NIM, and exposure to macro cycles, of course. And historically, fintech has struggled because it lives uncomfortably between these two worlds, software and the financial. Ramp's one of the first companies that has the luxury of picking a side and being able to back it up. The numbers support the narrative for one of the first times in the history of fintech. Their growth has been driven not just by payment volumes, but by product adoption, by becoming embedded into how companies actually operate. That's a very different story than we process transactions or we issue credit, as it were. It's we run a critical workflow for you. If public market investors buy into that framing, Ramp could be the first fintech company in this cycle to truly break out, but not because it's fintech, almost in spite of it. Because the real question isn't whether fintech can come back. It's whether a company can escape being seen as a fintech at all. You raise your seed round on it, you raise your A on it, and then when you get to the IPO, you almost want to avoid it. Ramp might be the first one to pull this off. I'm pulling for you, Ramp.